All right, welcome back to the deep dive. Today we're diving headfirst into Sunway REIT's Q4 2024 financials.
Looking forward to it.
Yeah, and I actually have both their official report and an analyst report from Kananda Research that you sent me.
Great.
Yeah, so those will be a big help. But here's the thing that really caught my eye.
Yeah.
Sunway REIT just hit a pretty huge milestone, like RM10 billion
Wow.
in assets under management. And it's only, the second REIT in Malaysia to actually pull that off.
All right.
So I'm really kind of curious to see how they managed to get there.
Yeah, it is quite a feat when you look at just how diverse their portfolio is. I mean, Sunway REIT isn't just those, big shopping malls.
Right.
They've got retail, hotels, office spaces.
Oh, wow.
They're even in industrial properties and services.
So they're not putting all their eggs in one basket, huh?
Exactly. That's what helps them, stay strong even when the economy gets a little shaky.
Yeah.
One area might be down, but another one picks up the slack.
Makes a lot of sense. So for someone like me who, isn't exactly a REIT expert, could you break down how that diversification strategy actually works in practice? Like, what are the benefits for, say, an average investor like me thinking about, maybe putting some money in?
Sure, yeah. Think of it this way.
Okay.
You wouldn't put all your savings into just one stock, would you?
No, that'd be pretty risky.
Exactly. Same idea here. If Sunway REIT only focused on, let's say, office spaces, and then everyone keeps working from home,
Right.
their returns could really take a hit. But because they've got hotels that are doing well with tourism coming back, and they've got industrial properties that are tied to, e-commerce, which is booming,
Yeah.
those sectors can kind of balance things out.
Okay.
For you as an investor, that could mean potentially, smoother returns and less worry about what's happening in just one specific market.
Okay, so that's a nice safety net kind of.
Exactly.
All right. Well, and speaking of returns, I mean, their Q4 report is full of impressive numbers.
Yeah, for sure.
Revenue is up by 7.2% year on year.
Wow.
And net property income, to NPI, that jumped even higher,
Really?
up by 8.1%.
That's fantastic. What I find really interesting is that the NPI growth is actually outpacing the revenue growth.
Oh, okay. So what does that tell us?
Well, it suggests that they're becoming more efficient with, managing their properties.
Okay.
They're squeezing more profit out of every ringgit they earn.
All right, so being smart with their money.
Yeah. And that's a really positive sign for investors who, are in it for the long haul.
Definitely, yeah. And then on top of that, they announced a record high DPU
That's right.
of 10 cents for the entire fiscal year 2024. Now, I know that DPU is super important for REIT investors, but I'll be honest.
Yeah.
Sometimes these financial terms, they make my head spin a little bit.
I understand.
So can you break that down for us? Like, what does that really mean for, let's say, an average person looking at this report?
Sure, yeah. So DPU stands for distribution per unit, and it's basically how much income they distribute to you, the unit holder, for each unit that you own.
Okay.
So record high DPU means they're really profitable and that they're committed to sharing those profits with the investors.
Okay, so bigger DPU, happier investors.
Basically.
Right, I like it. So it wasn't just about, being efficient with existing assets. It sounds like they also went on a bit of a shopping spree in 2024.
Yeah, that's right.
Adding 9 new properties
9, wow.
to their portfolio.
And that's a big reason why they crossed that RM10 billion mark.
Oh, okay.
The value of a REIT's assets, that's what directly impacts its market capitalization.
Right.
And these acquisitions, especially in retail and industrial, really pumped up their asset base.
Okay, so let's get into the specifics because I was reading through this. It's like they snagged 6 hypermarkets back in April. The Sunway 163 Mall in October, the Sunway Kwan Mall in December, and just recently an Aeon Mall in Manjung, Perak. But with all this buying, is there a risk that they're overextending themselves a little bit?
That's a really good question.
Yeah, and I guess from an investor standpoint, how can we look for any signs of trouble?
Well, while aggressive growth can seem exciting,
Yeah,
you have to think about the debt they might be taking on to finance all these purchases.
that's true.
So we'd want to look at things like their debt to equity ratio,
Okay.
making sure it's not, getting out of control.
Right, so not racking up tons of debt.
Exactly. And also keep an eye on how quickly these new acquisitions actually start adding to their profits. If it takes years for them to become profitable, that could be, a little bit of a warning sign.
Like a red flag. Okay.
Exactly.
Well, it makes sense. It's, like personal finances in a way.
Yeah, for sure.
Racking up credit card debt for things you can't really afford is never a good idea, even if they seem really cool and shiny and new.
Exactly.
Yeah, so we'll definitely want to keep an eye on that debt situation.
Absolutely.
Now let's shift gears a bit. I want to talk about some of their existing assets, specifically the Sunway Pyramid Mall.
Oh, yeah. How about that revamped Oasis wing?
Yeah, I was reading about that. It sounds like it reopened with a lot of fanfare.
Yeah.
And apparently foot traffic is up by something like 40%.
It's a perfect example of how smart asset enhancement initiatives, or AEIs, can really pay off.
Oh, okay.
By investing in upgrades, renovations, they attract more shoppers, probably higher paying tenants too.
Right.
That means more rental income,
Yeah.
and it increases the overall value of the entire property.
So spend a little money to make a lot of money, kind of.
Basically, yeah, think of it like, renovating your house.
Oh, okay.
You put some money in up front, but in the long run, you're increasing the value of your property.
Okay, yeah, that makes sense. It's interesting how they're balancing this, like buying spree with also, fixing up what they already own.
Mm-hmm.
So I'm looking at the Kananga report here, and I think it would be really helpful to break down their portfolio by segment and actually, look at those numbers.
Absolutely. Let's start with retail, which is their strongest performer right now.
Yeah.
You can really see that the new acquisitions and the success of Sunway Pyramid
Right.
are driving a lot of growth. And it's actually lining up with the overall retail market rebound in Malaysia.
Oh, okay.
So it seems like they're in the right place at the right time.
It seems like they have a knack for that. All right, now how about their hotel segment? How are those doing?
Hotels are doing well, too. They're getting a boost from all of the tourism that's coming back to the region.
Yeah, people are ready to travel again.
Exactly. People are eager to travel, and Sunway REIT's properties are in a great position to benefit from that.
Okay, so retail and hospitality, both strong. How are their office spaces doing?
Offices are, for the most part, stable,
Okay.
but there was a little dip in revenue.
Really?
Yeah, and it's most likely because of that tenant relocation at Sunway Putra Tower, which Kananga mentioned in their report.
Mm-hmm.
But it's important to remember that the whole office market is going through some changes.
Yeah, with everyone working from home and stuff.
Right, exactly. So this dip might not be a huge cause for concern.
Okay, so we need to look at the context of all these numbers.
Exactly. It's not just about the numbers themselves, but understanding what's happening in the bigger picture.
Got it. Now, what about their services segment?
Services are showing lower revenue, but that's mainly because they sold Sunway Medical Center back in 2023.
Okay.
So it's not really declining performance, it's just a change in what makes up that segment.
So we're not really comparing apples to apples anymore.
Exactly.
All right. Finally, let's talk industrial and others. This one's showing some big growth.
Yeah, and that's thanks to both acquisitions and improved occupancy rates. This is an area that's really benefiting from all the growth in e-commerce,
Right.
all those logistics and warehousing needs.
So when we zoom out and look at the big picture here, Sunway REIT seems to be doing pretty well, right?
Yeah, they seem to be firing on all cylinders.
Yeah, retail's booming, hotels are bouncing back, offices are steady, and industrial is like taking off.
Uh-huh.
And all of this while hitting that RM 10 billion milestone. I'm really curious to hear what those analysts at Kananga Research have to say about all this.
Yeah, well, from what I've seen, they seem pretty optimistic.
Yeah.
They gave Sunway REIT an outperform rating
Okay.
with a target price of RM 2.07.
Wow. Outperform. That's a pretty big vote of confidence.
Definitely.
So what are some of the key things that are making them so positive? What makes them think that Sunway REIT can actually beat the market?
Well, they highlighted a few key factors.
Okay.
First, they really believe in that diversified portfolio we talked about.
Mhm.
Provides a lot of resilience, especially when things are a little uncertain economically.
Right. Right.
Second, they're impressed by how actively Sunway REIT manages its assets.
Oh, okay.
Like that Sunway Pyramid revamp, it shows they're not just sitting back and collecting rent.
Yeah, they're actually trying to improve things.
Exactly. They're making strategic moves to boost their earnings, which is what investors want to see.
Yeah, absolutely. So it's
Yeah.
not just about owning stuff, it's about managing it well.
Exactly. And the third thing they pointed out is Sunway REIT's strong brand equity.
Okay. Yeah, I can see that.
The Sunway name, it carries a lot of weight in Malaysia.
It does, yeah.
And that recognition attracts shoppers and tenants.
Mhm.
It's a sign of quality, reliability,
Right.
and that translates to confidence for investors.
It's kind of like buying a product from a brand you already trust.
Exactly.
Like you're more willing to pay a little extra if you know you're getting something good.
That's a great way to put it. But, even with all these positives, we always have to remember that there can be challenges.
There's always a but, isn't there? No investment is perfect, right? So what are some of the potential headwinds that Kananga is seeing? What should we, as potential investors, be keeping an eye on?
One thing they mentioned is the possibility of subsidy rationalization in 2025.
Okay.
If the government cuts back on subsidies, it could mean higher operating costs for businesses,
Right.
and that could then affect consumer spending and occupancy rates.
So it's kind of a domino effect.
Exactly. It's something to be aware of.
Okay, so we need to look beyond just the numbers, even beyond Sunway REIT specifically.
Right. It's about understanding what's happening in the Malaysian economy as a whole.
Got it. So it's like zooming out to see the bigger picture.
Exactly.
What other challenges are out there?
Well, competition is another factor.
Mm-hmm.
The REIT market in Malaysia is getting more and more competitive.
Yeah, there are lots of options for investors.
Exactly. And new players are entering the market all the time.
Okay.
So Sunway REIT needs to keep innovating and find ways to stand out from the crowd.
So they can't just rest on their laurels.
Exactly. They need to constantly adapt and evolve if they want to stay ahead.
Like any business, really.
Mhm.
So how do you think they're positioned to actually tackle these challenges?
Yeah.
What gives you confidence in their ability to, navigate these potentially rough waters?
Well, what I find impressive is that they're not just reacting to the market,
Mhm.
they're actively trying to shape their own future.
Okay.
Take, for example, their move into the industrial and logistics sector.
Right, we were just talking about that.
They saw the growth potential there, especially with e-commerce on the rise, and made strategic acquisitions to take advantage of that trend.
Like they're playing chess,
Yeah,
thinking a few steps ahead.
that's a great analogy. And it's not just about quantity for them.
Mm-hmm.
They're going for quality, too. Acquiring modern, high-tech facilities that will attract those top-tier tenants.
Right, so they can charge higher rents.
Exactly. It's not just about filling up space.
Make this.
It's about attracting those tenants who will pay a premium.
So they're being very strategic about their choices.
Exactly. And they're also using technology to make things better.
Oh, okay, how so?
They've got things like smart building solutions
Mm-hmm.
to make their buildings more energy efficient and reduce costs.
Oh, okay, so that's good for the environment and for their bottom line.
Exactly. It's a win-win.
All right. So they're not just chasing profits, they're also thinking about sustainability.
Yeah, and that's important because more and more investors are looking for companies that are committed to ESG principles.
Right. Environmental, social, and governance factors.
Exactly. And they're realizing that doing good can also be good for business.
It's like that saying, doing well by doing good.
Exactly.
Okay, so we've talked about their growth, their acquisitions, their commitment to ESG.
Mm,
But with all this expansion, we need to look at how they're actually paying for everything.
that's right. Debt can be a powerful tool for growth,
Yeah,
but it can also become a burden if it's not managed carefully.
absolutely.
Yeah.
So what can you tell us about their debt situation?
Well, as of Q4 2024, their gearing ratio is 42%,
Okay.
which is well below the 50% regulatory limit.
So they're not over-leveraged.
No, they seem to have a good balance between debt and equity.
Okay.
It gives them the flexibility to keep pursuing growth opportunities.
All right, that's good news. But it's definitely something we'll want to keep an eye on as they continue to, go on this acquisition spree.
Absolutely. It's important to track those debt metrics, especially as interest rates can change.
Right, because if interest rates go up, it could make things a lot more expensive for them.
Exactly.
Okay, so we've covered a lot of ground here.
We have.
We've talked about their financial performance, their strategy, their debt management.
Mhm.
But let's not forget about the people behind all of this.
The management team.
Exactly. They're the ones making the decisions
Right.
that ultimately affect how successful the REIT is.
Yeah. What's your take on their leadership?
Yeah, sometimes I think we forget that behind all these reports and numbers,
Yeah,
there are actual people making these calls.
that's true.
It's easy to get caught up in the data, but it's the human factor that really drives success.
I agree. I think Sunway REIT has a really experienced management team with a great track record.
Okay?
They've shown they can handle tough market conditions, make strategic acquisitions, and deliver consistent returns for investors.
So they've got the experience and the expertise.
Absolutely.
What else is important about their leadership?
Their commitment to transparency and communication is really commendable.
Okay.
They regularly engage with investors, provide updates on their strategy, performance, and outlook.
Yeah, that open communication is so important,
It really is.
especially in finance where trust is so crucial.
Exactly. It builds trust and confidence among the unit holders.
All right, so we've talked about their financials, their strategy, their management.
Mm-hmm.
We even touched on their commitment to ESG.
Right.
But before we wrap up this part of our deep dive, I want to take a step back and consider Sunway REIT within the bigger context of the Malaysian economy.
Yeah, that's an important perspective.
Because REITs don't exist in a vacuum, right?
Yeah.
They're connected to everything that's happening around them.
Exactly. They're intricately linked to the economic environment they operate in.
So how does Sunway REIT's performance reflect broader economic trends in Malaysia?
Mm-hmm.
What are some of the connections you're seeing?
Well, take their success in retail, for example.
Mm-hmm.
It matches up with reports of rising consumer confidence in Malaysia.
Okay.
People are feeling optimistic about the economy, which means they're spending more.
So more money flowing into those shops and malls.
Exactly. Which is good news for Sunway REIT's retail property.
Definitely. And what about their success in hospitality?
Well, that's a reflection of the tourism rebound happening across Southeast Asia.
Yeah, Malaysia's a popular destination.
It is, and Sunway REIT's hotels are benefiting from that influx of visitors.
Okay, but we also need to be aware of potential problems, right? You mentioned subsidy rationalization earlier.
That's right. It's a risk to keep an eye on.
Yeah, because any significant economic downturn could impact how well Sunway REIT's properties perform.
Exactly. It's all interconnected. The REIT's fate is tied to the ups and downs of the broader economy.
All right, so it's like a two-way street.
Precisely. That's why it's crucial to stay informed about those economic trends.
And how they might affect our investment decisions.
Exactly.
Okay, so we've covered a lot of ground, but there's one area I want to explore further.
Yeah.
Sunway REIT's long-term growth prospects. I mean, they've achieved some impressive growth,
They have.
but can they keep that momentum going? What are your thoughts on their future potential?
Well, I'm optimistic.
Yeah.
I think they're well positioned for continued growth.
Yeah.
They've got a solid track record, a diverse portfolio, and a strong management team. Plus, they're actively pursuing opportunities in high-growth sectors like industrial and logistics.
Yeah, it seems like they're playing the long game here,
They are.
making smart moves now to set themselves up for success down the road.
Exactly.
But of course, no investment is without its risks.
That's right.
So what are some of the challenges that they might face in the future?
One of the biggest challenges is going to be managing their growth effectively.
Okay.
As they acquire more properties, they need to make sure they can keep up those high standards of asset management and tenant relations.
Right, because they're getting bigger and better.
Exactly. And they can't spread themselves too thin.
Yeah, it's like juggling.
Yeah,
The more balls you add, the harder it gets to keep them all in the air.
exactly. And they also need to pay attention to how consumer preferences are changing.
Right, because the world's always changing.
It is. The retail landscape is evolving quickly with e-commerce and new shopping habits. Sunway REIT needs to stay ahead of those trends
Yeah.
and adapt their properties to meet the needs of tomorrow's shoppers.
So they need to keep their finger on the pulse of what people want.
Exactly. And be ready to change with the times.
And then there's technology too, right?
Oh, absolutely.
Like we're seeing all these advancements, like self-driving cars and drones delivering packages.
And that could have a huge impact on the demand for traditional retail and logistics spaces.
Yeah, it's amazing to think about how all this new technology could completely change the real estate market.
It really is something to watch. For Sunway REIT, and any REIT really, the key is to be adaptable, think ahead, and figure out how to turn those potential disruptions into opportunities. Sunway REIT is proactive about managing their properties. Like, it's not just about sitting back and collecting rent.
Right, they're making moves trying to improve things.
Exactly. They're actively trying to increase their earnings. And that's what makes investors happy.
Yeah, for sure. And that's what we want to see as investors, right?
Absolutely. And the third thing Nonga pointed out was Sunway REIT's strong brand equity.
Yeah, that makes
The
sense.
Sunway name, it means something in Malaysia.
It does, yeah. It's a well-known brand.
And that recognition, it helps them attract both shoppers and tenants.
Right, people trust the name.
It's a sign of quality reliability, and that gives investors confidence.
Yeah, it's like when you buy a product from a brand you already trust.
Exactly.
You're willing to spend a bit more knowing you're getting something good.
That's a great way to put it. But of course, even with all these positive signs, we have to keep in mind that there could be challenges ahead.
Right. There's always a but, isn't there?
Yeah.
No investment is perfect.
Yeah.
So what are some potential headwinds that Kananga sees? What should we, as potential investors, keep an eye on?
Well, one thing they mentioned is the possibility of subsidy rationalization in 2025.
Subsidy what now?
So basically, if the government decides to cut back on subsidies,
Okay.
it could mean higher operating costs for businesses.
Right? Things get more expensive for everyone.
And that could then impact consumer spending and occupancy rates for Sunway REIT's properties.
So it's like a ripple effect.
Exactly.
Yeah.
It's a domino effect. We need to be mindful of that.
Okay. So we can't just focus on Sunway REIT's numbers.
Right.
We need to think about the bigger picture, the entire Malaysian economy.
Exactly. It's all connected.
Are there any other challenges out there that we should be aware of?
Well, competition is another big one.
Yeah, that makes sense.
Yeah.
The REIT market is pretty crowded.
It is. The REIT market in Malaysia is getting more and more competitive.
Right. There are tons of options for investors these days.
Exactly. And new players are entering the market all the time.
Okay. So how does Sunway REIT stay ahead of the game with all this competition?
They have to keep innovating. They have to find ways to stand out and attract investors.
So they can't just sit back and relax.
No, they have to adapt and evolve to stay ahead of the curve.
It's like any other business, really. You snooze, you lose.
That's a good way to put it. So how do you think Sunway REIT is positioned to tackle these challenges? What makes you confident in their ability to navigate these potentially choppy waters?
Well, what impresses me is that they're not just reacting to what's happening in the market.
Okay.
They're proactively trying to shape their own future.
I like that. Can you give me an example?
Sure, take their push into the industrial and logistics sector, for example.
Oh, yeah, that's a good one.
They saw the growth potential there, with e-commerce booming,
Right.
and they made some smart acquisitions to take advantage of that trend.
So they're not just following the crowd.
Nope. They're thinking strategically, like they're playing chess, anticipating their opponent's moves.
That's a great analogy. And they're not just focusing on quantity either.
Oh, so it's not just about buying up as many properties as possible.
Right. They're focused on quality, too.
Okay, so what does that look like in practice?
Well, they're acquiring modern, high-tech facilities.
Oh, wow. So state-of-the-art stuff,
Exactly. The kind of places that will attract those top-tier tenants.
so they can charge higher rent.
Exactly. It's not just about filling space. It's
Wow.
about attracting tenants who are willing to pay a premium.
That makes a lot of sense.
Hmm.
So they're being very selective about the properties they buy.
They are. And they're also using technology to enhance their operations.
Oh, interesting. How so?
For example, they've implemented things like smart building solutions.
Smart building solutions, what are those?
Well, they're systems that help make the buildings more energy efficient,
Okay,
and they can help reduce costs, too.
so it's good for the environment and good for their bottom line.
Exactly. It's a win-win situation.
I like it. So they're not just chasing profits. They're also thinking about sustainability.
Yeah, and that's becoming more and more important for investors.
It is. More and more investors are looking for companies that are committed to ESG principles.
Right. Environmental, social, and governance factors.
Exactly. So Sunway REIT is kind of hitting all the right notes there.
They are. They're showing that doing good can also be good for business.
It's like that saying, doing well by doing good.
Exactly. Now, with all this growth and expansion, we also need to consider how Sunway REIT is financing all of this activity.
That's true. Debt can be a double-edged sword.
It can. It can be a powerful tool for growth.
Yeah.
But it can also become a burden if it's not managed carefully.
Absolutely. So what can you tell us about their debt situation?
Well, as of Q4 2024, their gearing ratio is 42%.
Okay. And what does that mean?
It means they have a healthy balance between debt and equity.
So they're not over-leveraged?
No, they seem to be managing their debt well.
Okay.
Yeah.
That's good to hear. But it's definitely something we'll want to keep an eye on as they continue to make acquisitions.
Absolutely. It's important to monitor those debt metrics, especially as interest rates can fluctuate.
Right. A sudden spike in interest rates could really impact their profitability.
It could. So far, their debt levels seem manageable.
Good. But we'll definitely want to keep an eye on that.
Agreed. Now, we've talked a lot about their financials, their strategy, their commitment to ESG.
Yeah, we've covered a lot of ground.
But let's not forget about the people behind all of this, the management team.
Oh, yeah. They're the ones calling the shots, making the big decisions.
They are. So what's your assessment of their leadership?
Sometimes I think we get so caught up in the numbers and the reports
Yeah.
that we forget there are actual people making these decisions.
Mhm.
It's easy to get lost in the data.
That's true. But ultimately, it's the human factor that drives success.
I agree. So what do you think about Sunway REIT's management team?
Well, I think they have a very experienced and capable team in place. They have a proven track record. They've demonstrated their ability to navigate challenging market conditions.
Mm-hmm.
They make strategic acquisitions, and they deliver consistent returns for investors.
That's what we like to hear.
Their experience and expertise are invaluable assets to the company.
For sure. Anything else that stands out about their leadership?
I'm also really impressed by their commitment to transparency and communication.
Oh, yeah, that's so important.
They regularly engage with investors, providing updates on their strategy, their performance, and their outlook for the future.
That open communication is crucial for building trust.
It is, especially in the world of finance where trust can be fragile.
Absolutely. Okay, so we've discussed their financials, their strategy, their management team.
And their commitment to ESG.
Right. Even their commitment to ESG.
Mm-hmm.
But before we wrap up this deep dive, I want to take a step back and consider Sunway REIT within the broader context of the Malaysian economy.
That's a crucial perspective.
Because REITs aren't isolated entities, right? They're connected to everything that's happening around them.
Exactly. They're intricately linked to the economic environment in which they operate.
So how does Sunway REIT's performance reflect broader economic trends in Malaysia? What are some of the key connections you're seeing?
Well, their strong performance in the retail sector aligns with reports of rising consumer confidence and increased spending in Malaysia.
So people are feeling good about the economy and they're spending more money.
Exactly. And that translates to more money flowing into shops and malls.
Which is great news for Sunway REIT's retail properties.
It is. And their success in the hospitality sector is also a reflection of the tourism rebound happening across Southeast Asia.
Right. Malaysia is a popular tourist destination.
It is. And Sunway REIT's hotels are benefiting from this influx of visitors.
But we also need to be aware of potential economic headwinds, right? You mentioned earlier the possibility of subsidy rationalization.
Yes, that's definitely a risk factor to monitor closely.
Because if the government cuts back on subsidies, it could lead to higher costs for businesses and potentially dampen consumer spending.
Exactly. And any significant economic downturn could impact the performance of Sunway REIT's properties.
It's all interconnected, isn't it?
It is. The fate of a REIT like Sunway is tied to the ebb and flow of the broader economy.
That's why it's so important to stay informed about economic trends and how they might impact our investment decisions.
I agree. Now, you mentioned earlier that Sunway REIT has achieved impressive growth in recent years.
They have.
But can they sustain this momentum? What are your thoughts on their long-term growth prospects?
That's a great question. I'm optimistic about their future. I think they're well positioned for continued growth.
Okay. What makes you so confident?
Well, they have a solid track record, a diversified portfolio, and a strong management team.
Those are all good signs.
And they're actively pursuing opportunities in high-growth sectors like industrial and logistics.
It sounds like they're playing the long game, making strategic moves to position themselves for success in the years to come.
They are, but of course no investment is without risk.
Right. What are some potential challenges they might face in the future?
Well, one challenge is going to be managing their growth effectively.
That makes sense.
As they acquire more properties, they need to make sure they can maintain their high standards of asset management and tenant relations.
It's a lot to juggle.
It is. It's
Yeah.
like juggling. The more balls you add, the harder it becomes to keep them all in the air.
Exactly. And they also need to be mindful of changing consumer preferences.
Right. The world is constantly evolving.
It is. The retail landscape is evolving rapidly with the rise of e-commerce and changing shopping habits.
People are shopping differently these days.
They are. So Sunway REIT needs to stay ahead of these trends and adapt their properties to meet the needs of tomorrow's consumers.
So they need to have their finger on the pulse of what shoppers want.
Exactly. Anticipating those desires and evolving their offerings accordingly.
And then there's technology too, right?
Oh, absolutely.
You're seeing the rise of things like autonomous vehicles and drone delivery.
And those could significantly impact the demand for traditional retail and logistics space.
Yeah, it's kind of mind-blowing to think about how these emerging technologies could reshape the entire real estate landscape.
It is. It's definitely something to keep an eye on. For Sunway REIT, and any REIT for that matter, the key is to be adaptable and forward-thinking,
Right.
anticipating those disruptions and finding ways to turn them into opportunities.
Okay, so we've talked about their strengths, their challenges, and their long-term prospects. We've really gone deep on this one.
We have. We've covered a lot of ground.
But before we wrap up this deep dive, I want to hear your final thoughts on Sunway REIT. What's the big takeaway for our listeners who are considering adding this REIT to their portfolio?
I think the big takeaway is that Sunway REIT is a solid option for investors who are looking to get into the Malaysian real estate market.
Okay.
They've got a good track record, a diverse portfolio, a strong management team. But like with any investment, you really got to do your homework.
Yeah, that's always the golden rule, right? No matter how much you trust someone, got to do your own research.
So what are some key questions or areas that our listeners should focus on as they're digging into Sunway REIT? Like, what would you be looking at if you were making this decision yourself?
Well, I definitely spend some time looking into their acquisition
Uh,
strategy.
yeah,
We talked about all those recent purchases, but are they consistently picking properties that are going to be winners?
right.
Are these new properties actually boosting their earnings, or are they dragging them down?
So it's not just about how many properties they buy.
Right.
It's about the quality and if it fits with their overall strategy.
Exactly. And as investors, we want to make sure those new assets are actually adding value for us.
Definitely. And speaking of value, I'd also take a close look at their asset enhancement initiatives.
Mm-hmm. Like the Sunway Pyramid revamp. That was a good move.
Yeah.
But are they consistently putting money into their existing properties to keep them competitive?
Right. Because nobody wants to invest in a rundown mall or a outdated office building. Exactly. And then don't forget to consider what's happening in the economy as a whole.
Right.
We talked about the potential risk of subsidy rationalization, but what about other things that could affect Malaysia's economy? Like interest rate hikes, inflation, political stability.
All those things can have an impact.
They do. All of those factors can play a role in how REITs perform.
So we got to put on our macroeconomic hats and assess the overall situation before jumping in.
Exactly. And one last thing, remember those psychological biases we talked about earlier?
Oh, yeah.
Don't get carried away just because Sunway REIT hit that RM 10 billion mark.
Right.
Take a step back, look at the facts, and make a rational decision.
It's easy to get caught up in the hype when everyone's talking about a certain investment.
It is.
But we need to be smart about it, do our own research, and make decisions that are right for us.
Well said. Investing is a journey, not a sprint.
I like that. It's a marathon, not a race to the finish line.
Take your time, do your research, and make choices that align with your long-term goals.
All right. Well, I think we've covered just about everything on Sunway REIT.
I think so too. We really went deep on this one.
We did. Hopefully our listeners feel like they have a good understanding of Sunway REIT now.
And they can make an informed decision about whether it's a good fit for their portfolio.
Yeah, exactly. And if you want to learn more, we encourage you to check out those source materials we talked about.
Definitely. The more you know, the better equipped you'll be to make smart investment decisions.
Couldn't have said it better myself. Well, thanks for joining us on this deep dive into Sunway REIT's Q4 performance. We'll be back soon with another deep dive into a different corner of the financial world. Until then, happy investing, everyone.